So waiting to hear your voice,
Hi, Dale,
Colin. And hi, Colin. Very nice to meet you.
Thank you. You too. It's great to meet you and everyone. Thanks for having me on today.
Oh, you're very welcome, Colin. So you're out of what location for CMC Markets? They're global. Where are you?
Yes, I'm in CMC Markets Canada office located in Toronto.
Okay, sister city to my hometown, Chicago. And
Yes,
so
absolutely.
great to meet you. Yeah, great to meet you. And I always like to start with, before we get to some of the things you're looking at here, Colin, is how did you get into the industry?
You're breaking up, Dale.
How did you get into the industry? Can you tell us a little bit about the beginning of your journey? You ended up in a great spot as an analyst for a top broker bank. What was the beginning like for you, Colin?
Oh, absolutely. I'll go back from my family. My dad was an independent analyst for about 40 years, and he had, well, the first 15 years of his career, he worked for various brokerages in Canada, and then in the last 25 years, he was an independent analyst. And so I grew up around the markets. I grew up around analysts, and it's funny I say I grew up around a bit of both sides of it. It's fundamentals and technicals. I grew up with seeing a financial analyst journal lying around. I also grew up seeing graphoscopes. So my background has always been kind of integrating both fundamental and technical analysts. I'm a chartered financial analyst and a chartered market technician. I started my career, interestingly enough, working in small capital finance, and as time moved on, I found that I was more interested in charting and in trading, and I gravitated over towards, I became a retail analyst working with retail brokers as well as trading desks, which involved as I moved away from finance into trading, that I got more and more involved in technicals as years went on. So I worked for Canaccord Capital, what's now Canaccord Genuity, for the better part about 11 years. I worked for them in a number of capacities, primarily as time went on. I started out as an analyst working with a retail broker. I moved up and eventually became their primary technical analyst. I also worked for a newsletter called The Morning Coffee that they publish, which focuses on daily action in news in individual stocks. Plus, I was publishing a daily newsletter on with technical picks as well. I was doing 2 Canadian and 2 US stocks a day. And
So
as I moved through the course of my career, I found that it was as I moved through my career, I found I was getting more and more interested in the bigger picture, and I was doing a lot of bottom-up work, but the top down also really intrigued me, because you could see how the larger moves were having an impact even on small and mid-cap stocks as you moved through a market cycle. And so I was, and of course being an avid follower of energy stocks and mining stocks and junior mining stocks. Clearly the impact of commodity trading was also really important.
Yeah, you Canadians are hard asset. You Canadians are hard asset people, that's for sure. And how fortunate for you, and how fortunate for you, Colin, to have been mentored in a trading family, compared to what a lot of people have to go through searching the internet in a sea full of sharks and barracudas talking about unrealistic returns. You had a great foundation to launch your career from. You're very fortunate, 1 out of 1,000. And nowadays you can't even find a trading floor for a young person to go work and learn the business, because most of them are bowling alleys now. So you were very fortunate and blessed to come up in a trading family like this. So was your dad your biggest influence?
Absolutely.
Were there
about it?
Go ahead.
Definitely, there were others as well. I worked with a lot of very senior traders and senior brokers that gave me a lot of advice over the years. And you're right, when I just as I was starting my career was the last couple of years where they had the trading floor in Canada, and then they closed it and moved everybody upstairs. And now it's not even at a lot of the brokers now. A lot of the professional traders, they can trade from home. A lot of them don't even come into the office anymore.
Yeah,
so
that whole it was a golden
thing has changed.
like, you know, I sound like a dinosaur. The good old days of open outcry, how I miss them. But you can relate a little bit. So were there any, once you started gravitating towards charts, I see you're using candlesticks, were there any of the famous technicians or any books, or did you have any mentors that you could recommend other people to follow that had a positive impression on you and steered you in the right direction for what kind of contingencies to look for in a chart?
I mean, I did a lot of my work was more general. So I took the Canadian Technical Analysis course that was written by. Yeah, pretty much. It was a lot of experience and flatly a lot of charting. One of the things I did growing up with my dad was we would do charting by hand of every single stock on the TSX plus the Dow, and we did that for years. I calculated in, because I'm old enough in the days before we had spreadsheets, that I've calculated moving averages for every stock for years, monthly moving averages. So yeah. I've got a lot of foundation in. I consider myself in some ways I'm the last of the old school. I'm one of the last people that actually grew up charting by hand, because even by the time I actually was old enough to enter the workforce, everybody was doing charting on computer.
Right. Yeah, I used commodity perspective for years, Colin. So I carried it around with coffee stains and ketchup and everything on it. So interesting. And just think about all the time you spent calculating everything by hand instead of having it by computer. But you know, NLP people believe that anything you write down, including keeping up a chart by hand, leaves a deeper impression, and you're more likely to recognize a critical area in the market if you do it by hand than just look at a computer screen. Do you agree with that?
I totally agree with that. Absolutely. And to this, I mean, because I'm looking at so many charts, I do it all on computer, but I always figure that my years of experience of doing it by hand, I can have the feel of it because I've done it. I can look at the screen. Okay, I know what that's like. But absolutely, for anyone starting out, being able to just do a bit of charting by hand and get used to it, because I always called it the organic feel of the market. And one thing that I haven't had time to do, but I know that the older brokers told me at the start of my career was they'd sit there and they'd spend the first 10 minutes of the trading day watching the ticker.
Right.
And just watching the ticker, and they say, well, watching the ticker is how I get a feel of what's happening in the market. And whether it's charting by hand or watching the ticker or things like that, there are some arts that have been lost in
the art of the tape reader.
Technological advantages. We've had a lot of gains, but we've lost some things along the way as well. Everything comes with a price. There's no free lunch in finance. So
we've talked a little bit about history. Now let's talk a little bit about mystery. We have BOV. You say that you're also a fundamental trader. So we've had a nice push up in cable this week. BOE meeting on Thursday. What are you telling your clients at CMC, your customers, about where the pound is heading and how they should trade it into the BOE, or if it's a stand aside until after?
Mm-hmm. Sure, just let me bring up my cable chart here. And so first, maybe I'll give a quick background on the CMC markets.
Okay. Nice screen.
I'm sorry I've lost you, Dale.
I like it. Okay, waiting for the cable chart. I'm here.
Okay, so the cable chart's just coming up. I'll just give a quick background on CMC Markets. So I've been with CMC Market Canada office for, it'll be 10 years in a couple of months. And so for CMC, I cover primarily indices, commodities. Oh, thank you. I cover indices, commodities, and foreign exchange. We have a global team of 8 technical analysts. We have, in addition, I cover the North American time zone. We have 3 analysts in Europe, 2 in London. Our head office is in London. We also have a number of analysts in Australia, New Zealand, and Singapore that work with our Asia Pacific offices. So I do 2 notes a day. I publish 1 note in the morning that kind of covers the European morning and North American open, and then I do an afternoon note that covers the North American close and is our Asia Pacific morning preview. So I cover quite a bit.
Is that published on Market Pulse? Is that published on Market Pulse? those comments?
No, it's not. Market Pulse is Oanda Corporation, which is one of our competitors.
I just saw it on your screen, and it was familiar to me. Okay.
So yes, I publish through All
right.
Yes, so we have it on our available on our websites, as well as I post links on my Twitter feed as well.
Does CMC have any type of live social trading community where your clients can get together and go over the analysis of the work from CMC analysts and discuss what they're seeing, collaborate in any way? Does CMC have anything like that?
Yes, we do. It's built into our trading platform, and we do. We have a feature called Chart Forums where I can go in and I click on Chart Forum and I can type in it'll show my chart and an analysis from me, and then I can talk back and forth with our clients on it. Our clients can post their own charts as well. One thing I should note as we move into that is CMC is not in the United States. We are in we're in pretty much most of the other major English-speaking countries around the world, but we're not available in the United States. I thought I should mention that.
Who is?
In terms of our competitors, there are competitors that do operate in the United.
Yeah, basically in the United States, who is? There aren't many left. Oh, so that was
I guess our main competitors in the United States would be Oanda and Forex.com.
Okay, yeah, they're the only ones left. So, okay, the baton aside from the baton death march of choice for Forex brokers in the U.S., what is on your radar screen? And is your belief that this turn in the euro is secular or cyclical? Is this just going to be one huge bear market rally that maybe even trades to 120? Or was the top that we saw in the Dixie at 104 near the end of the year the end of the bull market in the dollar, and now we're in a secular bear market in the dollar? There's big debate on that. Where do you come down?
I am thinking that we're getting into a bear market for the dollar, and the reason I say that is that I think you had at the end of last year, and really let's say through most of 2016, you had almost a perfect storm for the U.S. dollar, particularly right at the end of the year. People were still worried about Europe and what was going to happen politically in Europe, and at the same time, you had the Fed had been the first central bank to really take that hawkish swing, and while a number of other central banks were still sitting in pedal to the metal, full-on dovish stimulus, and so that really propelled the U.S. dollar upward. I think in the last few months you've seen that a lot of the political assumptions underlying the U.S. dollar move, that things were that Trump was going to be able to do everything he wanted fast, no opposition, no turmoil, and clearly that hasn't been the case. I mean, and I was saying even then, it's like, look, things are going to take a lot longer. Reform is always bumpy and rocky, and I think the streets kind of come around to that over time.
Give them credit.
Central bank.
Give them credit. He also wanted a weaker dollar. Give them credit. I'm sorry if I'm talking over you, but I want this to be I want this to be an interview, not a soliloquy. So looking at
that's a fair point. I mean, look, if he wants to boost U.S. trade, getting the dollar down, whether you talk it down or whether other things happen to do it, certainly absolutely would help the U.S. trade position and U.S. manufacturers. And so yeah, I think the U.S. dollar has probably peaked, and the world's kind of coming back around. You saw that the Bank of Canada raised interest rates last month. You were mentioning the Bank of England. Carney's coming under a lot more pressure to actually get up and do something, and in particular just to start raising interest rates in the UK as well, because they've got to start thinking about is inflation going to get away on them. So will
the Japanese ever join that chorus?
That's a really good question. I'd like to think so, but every time I look at the Japanese data, it's just a country that's still struggling. But I also have to sit there and ask myself, when are they going to run out of stuff to buy? They own I had seen some statistic that they're starting to own a ridiculously big chunk of Japanese stocks because they bought all the bonds they can buy and all the other assets they can buy, and they've gone into stocks. And it's sooner or later, you kind of wonder. I mean, clearly, a central bank can't run out of money, but it looks like they're going to run out of stuff to purchase at some point, or they're going to end up owning the whole market.
Yeah,
right?
I mean,
I think that may be what ends up forcing it on them rather than any kind of improvement in the economy, because I keep looking and their inflation doesn't move, and their economic data goes up and down, and it still seems to be struggling. Europe might be turning the corner finally, and the UK's been doing well has really been able to take advantage of the lower pound, but Japan is still struggling really out there, and really long term with their demographic issues. You've got to wonder, what is it going to take for them to get their economy going when you've got a shrinking population and no immigration.
Okay, well, being a Canadian, and most Canadians are, very interested in natural resources, and you talked about, that's something you were following. Who knows, maybe even traded on the Vancouver Exchange. That's still the wild, wild west. What's your take on oil, Colin? We've had a nice recovery from the $44 level up towards 50. Do you have a view that this was just another rally that may fail, or is there something else going on, and maybe some of the geo stuff happening in Venezuela, possibly the Middle East, surprises people with oil to the upside? Many still thinking, because every time they've tried to buy the market, all they've gotten is bear market rallies and lower lows, or the best they could say is we're range bound between that 45 and 55 level. You have a view on that?
Yeah, I still think we're range bound between 45 and 55, and you might even be able to spread that out to say 40 to 60, particularly if you're thinking Brent. But well, I think what you're looking at here with crude oil is one thing amazes me is collapsing and all the turmoil there, that oil isn't up more. And similarly, you've got these political risks in the Middle East, and nobody's really paying attention to that either. But what does intrigue me and makes me think that this upswing might be a little bit more sustainable this time is that the cap on oil has really been of this feeling that, and when we saw it earlier in the year, that the higher oil prices would bring shale production back on, and that any production that OPEC cuts back would be more than made up for by increased U.S. production. But then I sat there and started watching the earnings reports coming in last week, and it was really intriguing when you started hearing things like Halliburton saying oil field service and drilling demand is slowing. You had Anadarko and multiple other big oil companies actually cutting their CapEx budgets. And so when you start hearing that, you start thinking, well, gee, maybe that thesis out there, the idea, the notion that higher oil prices is going to lead to an explosion in shale production. Well, not necessarily the case at these price levels. It looks as though we're kind of hitting some kind of equilibrium, and at the same time we're starting to see the as much as we had the big ramp up in U.S. inventories, those are starting to come back down. Those are some pretty big drawdowns we saw in API and DOE last week, and for once they actually confirmed each other, which was good. And so it looks like perhaps this floor that we had around 42, maybe it's starting to move up to 45, and where we were trading 42 to 45, now we're trading 45 to 50. But the key thing is really, though, we're still range bound unless we can break 55. If we break 55, then something's clearing off to the races. But until then, we're still range bound, and flatly we're still in a trend of lower highs.
Right. So let me ask you this: you follow share prices and the underlying commodity. In this recent oil rally, oil shares, you said it because of earnings, et cetera, have way underperformed the commodity. Are you a believer that the stocks lead the underlying commodity, and because we've had underperformance in the oil shares, that could be a reason for this rally in crude to come off?
Yes, absolutely. I do think that energy shares lead the commodity price, and the reason I say that is because anytime you make an earnings forecast for an oil and gas company, you're bringing in two factors. One is production and one is price. So implicit within the price of energy stocks is a forecast of future oil prices. You have to have that to do any kind of a evaluation. So yes, and those are the kind of things we watch for. And now that we've had crude spike up here towards $50, and you're not getting confirmation from the stocks, you've got to wonder how much further upside you have. So I'll just note that the previous peak in crude was about 51.70. That was back in late May. This current high is another lower high around 50.30. So at the moment, so, you're still range bound. You've got to start taking out those previous highs if you're going to have any upside.
How about precious metals? How about precious metals, Colin? Gold shares haven't been acting as good as the gold either. So curious what you're thinking about that. Plus, silver's been outperforming gold late. Do you believe that that will continue and the gold-silver ratio will not come in but start to move back out?
Sure, I'm just bringing something up.
And someone still wants to know your opinion on cable going into the BOE, someone in our community.
Oh, yeah, I'll definitely circle back on cable. So first of all here, I've put in the gold chart. Gold is, well, essentially it's kind of trending sideways between, let's call it about 12, okay, the bigger trend is 1,200 to, let's say, 1,300 is what we're kind of looking at here, and currently sitting just in the upper half of that at about 1265. We've had a nice bounce up off of 1205, good run in gold, and we're running into resistance here about 1270. That is the extension of a previously broken uptrend line. So if gold fails here to break out in the next few days over 1270, that would be trouble. That would suggest that we may have peaked in gold and are starting to roll over. For now, we're in a sideways trend, but it is looking a little bit vulnerable here. When I look at the silver chart, which is the pink line here on the left, what you're looking at is that, I mean, gold and silver generally have kind of the same direction of travel over the longer term. But in this case, since about April, silver has underperformed gold fairly significantly. So I think the recent outperformance in silver is more of a catch-up play at this point in time. But you're right about the gold earnings is interesting. Two things. One is that they're not responding to the gold's price, and the second thing is that they haven't responded to some really spectacular earnings that came through last week out of the gold companies. You know, things that people like Barrick were put up some and Goldcorp put up some really good numbers last week, and yet you didn't really get the follow through throughout the gold sector, and that usually says to me, and that's not just on gold. We're seeing that on a number of sectors. We've had a few stocks that have had big moves off earnings, like Boeing. But on the other hand, if you look at some of the other names, like let's talk to the tech names, and Apple reports tonight. But you've had tech names like Google and Facebook and well, Amazon missed, but Google and Facebook had good earnings and they didn't respond really either, and that's a concern of mine for the stock market in general, is that that breadth is decreasing. Not all the companies are responding favorably to the earnings reports, and that's a sign to me of a bull market that's nearing exhaustion, at least for the near term. I mean, I think you've got a longer term bull in place, but I'm still concerned that you could get a sizable seasonal correction over the next 2.5 months.
How much? 5 to 7?
Yeah, that's what I'm thinking. Maybe even 10.
Okay.
But 10 would be the outer limit. It's probably a 5 to 7.
And wrap with you and cable and maybe even the Canadian, since that's your
absolutely.
Home Thank you.
Absolutely. So cable has been looking very nice since the, I'm just going to try and bring my weekly chart up here. So we had the big collapse in cable, obviously after the election, and that huge head fake, which was crazy. But you've got a double bottom in place in cable now, and it's been that was set right up at the beginning of the year, and since then you're basically been trending upwards. So I've got the Fibonacci retracements on here. You cleared the 127 was the first one. That was the 23%. Yesterday you broke out over the 38% retracement level, which was this 131.50. Plus you had this nice run up off 131. So you're clearing Fibonacci levels. You're clearing round numbers. You've cleared the 50 and the 200-day average. In May you had a golden cross. Your is accelerating to the upside, and it's not overbought. So overall, things are looking pretty good for cable on the daily, and similarly, again, the RSI confirming nicely on the weekly chart as well. You're heading into the Bank of England here. And so the question is, what's going to happen there? I don't think they're going to raise rates this time around. They've also got the inflation report, so you'll probably see more of a reaction to the inflation report than the decision. You'll probably see two or three dissenters once again, but you probably wouldn't get too many people getting excited unless you saw more than 3 dissenters. Although there's only 9 people in the MPC, so if you started getting many more dissenters like that, you'd be getting a rate hike. So you'll probably see it hang around 2-3 dissenters is my guess. You probably see a bit of a retrenchment in cable after that, unless Carney talks hawkish. If Carney talks hawkish, then it could keep going. But overall, these gains are partly this the shift towards at least neutrality and maybe getting more hawkish at the Bank of England. Inflation pressure is driven, but of course also the flip side of that is you're getting weakness in the US dollar. Now, talking about more hawkish central bank, do you want dollar CAD or CAD dollar, or it doesn't matter?
USD CAD's fine.
I'll do US dollar CAD to wrap up here.
Yeah, for retail.
Okay. So the loonie's been on a tear for the last 2 months, and we can see it in this chart here. Of course, this is the US dollar falling relative to the rallying loonie, and so what we're seeing here with this is that the Bank of Canada went hawkish. That peak in May and the downturn coincided with when the Bank of Canada members, Governor Paloz and his deputies, started saying, look, Canada had back in 2010, and when Carney was around, he had raised interest rates from 0.5% to 1%. Then when the oil price collapsed, Governor Paloz went from 1% down to 0.5%. And basically they said, well, the stimulus we brought in has run its course. The Canadian economy is now dealing with the lower oil price. That's all factored in. The economy is doing well. Inflation is picking up. It's time to start raising interest rates. So I'm figuring initially they'll take back the 2 cuts that they gave. So they've done 1 increase. They'll probably do 1 more between now and the end of the year. And the streets kind of has priced that in. So we have the Fed is raising interest rates. The Bank of Canada is now raising interest rates. Of course, the 1% on Bank of Canada would also bring it back up more or less in line with where the Fed is at currently. So you have this big plunge though now from 138 down to 125, and on the flip side, that's 80 cents on CAD US dollars. So that's a big round number psychological level, huge. And we're also, interestingly enough, we're also sitting at 80 cents on Aussie dollar right now too. So the two of them are at parity, which is also interesting. So I think what you're probably going to see, and you look down here at the RSI, you're extremely oversold. So my thinking is you're probably going to take a break here, and it'll pause with around 125. Maybe this bounces back up a little bit, maybe to 126, 126.40 in an upward correction. But I do see it staying below this kind of 128 for a while. It's still in a downtrend, but
there's some Elliott wave
counts. To see it go sideways.
Colin, there's some Elliott wave counts long term that would take it all the way down to 116. Could you see that being viable longer term? 116.
At that point, you'd probably need to see a rally in the oil price, getting it up above, something up above 60. It's possible over the longer term. I've always felt that there's a happy medium for the Canadian dollar, where when it was up at par, it was great for consumers and all the companies complain. And when it's down under 70 cents, all the consumers would complain and all the exporters are happy. And there is a sweet spot for the loonie. To me, it's somewhere between 80 and 90 cents on CAD US dollar, maybe even 80 to 85. So we're kind of getting into that now. So I mean, could you achieve that kind of an Elliott wave count? Sure, you could, but how sustainable that would be is another thing. But if you said 80 to 90 is call it 115 to 125 is a possible area where you could see it kind of settle in for the longer term.
Colin, I want to thank you so much for taking time out of your day to edify our community here at ForexAnalytix, and it was great meeting you and hearing your story, and thanks for sharing some views, and I wish you nothing but success, continued great career at CMC or wherever it is. And again, thank you for being with us today, Colin. Perhaps we could do this again down the road. The best way for people to follow you, Colin, is I have your Twitter handle is your name, plus you have a hyphen in there. Let's see, where are we here?
It's an underscore.
Yeah,
it's,
you have an
at Cieszynski_CMC.
That's it. And people that want to follow you regularly can open an account if they're not from the U.S. and maybe a few other countries and follow your work. Go ahead.
Oh yes, and also we do make it available on our website as well, cmcmarkets.com.
Well,
and for Canada, it's cmcmarkets.ca.
Well, I'd like to call you my trading warrior brother. That's what I call people who give their time to come and talk to us, and we appreciate it, Colin. Good hunting into the BOE, and thanks again for being with us.
Thank you, and thanks so much for having me today. It was great to meet you and talk with you today.
Okay.
This was excellent. Thanks.
Okay, everyone, that's Colin Cieszynski, and you can follow him at CMC. Thank you, F.A.C.E. Have a great day. Enjoy your summer, and we'll be back tomorrow. Thank you, Jess. Thank you, Blake and Nick and Steve and Grega and Velu and the whole ForexAnalytix team. And before you leave the room, click that link covering 9 more pairs. More than anything, remember, don't just count your pips, crotch. Count your blessings. See everyone tomorrow. Adios.